We believe robotaxis will be one of the largest AI opportunities of our time, and we expect roughly $28 trillion in enterprise value to be created in 2030 thanks to robotaxis or autonomous ride-hail.
So the big news is that we found out that Tesla is actually testing a ride-hail platform right now in California and that they have plans to launch it next year. Sounds like they're going to launch it with safety drivers. Not too much of a surprise. They stated that certain states have regulation over that. I guess California has a regulation where you need a safety driver at first, and then you need to pass some threshold of time or miles before you can pull that person out of the car. So, unclear exactly what the laws are in Texas. My guess is they're more lenient. I know there are more hoops to jump through in California. But what does this mean? Well, we've been saying that for some time, even if Tesla were to take a while to solve for full autonomy, or let's say take a while to get regulatory approval for a fully...
We predict that autonomous ride-hail or robotaxis will generate about $28 trillion in enterprise value by 2030, making it one of the biggest AI opportunities of our time. The significant news is that we now know that Tesla is now developing a ride-hailing network in California, with ambitions to launch it the following year. It should come as no surprise that they plan to deploy it with safety drivers. They said that certain states have laws governing it, I assume that California has a law requiring a safety driver first, after which you must wait a certain amount of time or miles before you can remove the driver. It's not really obvious what Texas's laws are. They must be more forgiving. In California, I am aware that there are additional requirements. However, what does this signify? We've been stating for a long that Tesla may launch a human-driven ride-hail service, even if it takes some time to figure out full autonomy, or, for example, to obtain regulatory certification for a fully autonomous taxi service. Additionally, they already have a more favorable pricing structure than the typical Uber car because, as we all know, the maintenance and operating costs of electric vehicles are around a third of those of conventional cars. Thus, there are numerous tactical and strategic justifications for doing so. In any case, it appears that this is how things will proceed in the beginning. The only thing left to decide is when they will remove the driver. Thus, we have been predicting a 60 to 40 chance for 2025 to 2026. It seems like that's still in play based on the news. I'm quite excited. Following the call, the stock experienced a significant reaction, probably as a result of consumers being pleasantly surprised by the earnings, which exceeded forecasts due of the vehicle platform's rather aggressive cost reductions. They claim to have hit a record price of roughly $35,100 per car. Therefore, I believe that was the main focus of the street. Autonomy has, of course, been our main priority. You have been concentrating on the humanoid robots at the We Robot event, Sam. We've had a lot of internal discussions about this. I felt like there was an anticipation for them to provide a lot more detail than came out. When comparing the We Robot event to previous product debuts, I don't think there was much of a change. They were obviously waiting for a more investor-style event to discuss those specifics, or perhaps they wanted to keep things more secret now that they were truly on the verge of launching. It's not enough to merely watch Tesla's remarkable rise from the sidelines. With the most recent information on Tesla, stock price targets, innovation, and all things Elon Musk, Seeking Alpha is the one-stop shop for Tesla bulls and those with an eye for finding the next big thing in the stock market. Our channel may receive a commission if a customer makes a purchase after clicking on the affiliate links in the description. In the end, we estimate that the robotaxis market is approximately $1 trillion in total addressable market size. That's a fantastic chance. Furthermore, we believe that in the early days of service, higher price points, so comparable to the $2 to $4 range of human-driven ride-hail costs today, will be feasible, as I stated at the outset. The $1 to $2.60 range is where we see a lot of opportunities. Another sizable portion of demand is available at prices comparable to what we observe being charged in China, which is about 50 cents per mile if you look at how customers value their time. Finally, this opens up the market to customers who aren't currently in the ride-hail market at 25 cents per mile. Because of this, we believe that the $11 trillion industry presents a far bigger possibility than the current ride-hail sector, which is now valued at hundreds of billions. And the reason for this is autonomous technology, which increases utilization rates and lowers the cost per mile, enabling many people to use robotaxis. Thus, the magic takes place there. Since these businesses will be able to take advantage of higher initial pricing points for autonomous ride-hail, we think that early adopters or businesses that are the first to expand robotaxi platforms should gain the most. Their income profiles ought to be more appealing. As you can see from this graph, we believe that the majority of the economic benefits of autonomous driving will be realized in the first about half of urban kilometers driven. We think there might be a $28 trillion enterprise value opportunity for businesses who run autonomous platform providers or robotaxi services by 2030. In comparison, that is about 9 times the current worth of the automobile industry. Crucially, the ride-hail and automakers of today might not be the robotaxi companies of the future. In actuality, the market is consolidating, and essentially every business operating in the automotive supply chain today ought to collaborate with or be among the pioneers of autonomous technology. We know that, to date software releases tend to happen. The latest software tends to happen on Hardware 4 vehicles, and then Hardware 3 vehicles get it later, especially with the recent versions of the full self-driving software suite, specifically everything 12.5, which was a huge update. Further, Tesla claimed that they were, heading towards this one model strategy. When I talked to some people at the We Robot event, they said, well, an end-to-end system actually makes this easier. Additionally, I mentioned a single model, one that is applicable to both Hardware 3 and Hardware 4 cars. Elon stated at the We Robot event that he didn't want to discuss Hardware 3 and 4 specifics. Based on what we've seen, I had theorized that it's still likely that they begin with Hardware 4, and it appears that they are acting in that manner, so it's not too unexpected. And to give you the numbers, it's about 6 million cars worldwide, Hardware 3 and Hardware 4, not exactly, but let's say that it's about a 50-50th split. Then roughly half of those 6 million reside in the United States. Therefore, if they wish to start there, they still have a good number of cars on the Hardware 4 platform. The next step is to essentially modify the model and compress it slightly in order to make it backwards integratable, as the inference chip on Hardware 3 has different power and memory limitations than Hardware 4. Elon went on to say that they would replace the hardware system if that didn't work. Thus, they have been constructing the vehicles for some time. Since Tesla first started producing its own inference chip and moving away from NVIDIA, there has been a panel on the car that you can really replace, the inference chip. Even if it seems complicated, they made plans for this many years ago in case they ever needed to accomplish it. You are aware that you may not be the first owner of a Hardware 3 vehicle to register it on the platform. It does, in fact, provide some incentives for you to move to Hardware 4 if you so choose, perhaps using the Tesla incentives. However, I believe that in the long run, they will want to make it work because Hardware 3 has enough automobiles. As I said, I think that they'll make it work somehow. It's just a question of how. We've dimensioned the market by price point, and there's, some market at Uber and Lyft pricing today. It's like a little under $200 billion roughly in market opportunity at the $2 to $4 price point. Then there's like a big portion of the market that, we've done some analysis based on how people value their time. It kind of makes sense if you look at the average cost to drive your own vehicle in the US as well at around $1 in Western markets, and then globally, like once you expand. If you require any other changes, please let me know.